Think of this. Cryptocurrency entered India's tech ecosystem with little fanfare around 2010, when small online communities of early adopters began experimenting with Bitcoin. It wasn't a high-profile event. Rather, it took shape through niche forums and informal groups where people who understood the underlying blockchain technology traded ideas and sometimes traded small amounts of Bitcoin. These interactions sowed the seeds for what could eventually become a market of millions of crypto investors. By 2013, India saw its first formal exchange, JioCoin, emerged from these early scattered efforts. JioCoin made headlines for streamlining the process of purchasing, selling, and holding Bitcoin for everyday users, effectively widening crypto access altogether. A few years later, ZPay and CoinSecure followed, offering more ways for Indians to buy and sell digital assets, while CoinEx gained traction for listing a variety of emerging cryptocurrencies. As these exchanges grew, awareness spread beyond the early adopters. So by 2017, when Bitcoin surged to around the $20,000 mark, an entire wave of new investors, ranging from millennials to traditional market traders, rushed in, intrigued by the idea of quick returns, or simply curious about new financial technology. Behind the scenes, an undercurrent of doubt and excitement coexisted. On one hand, there were conversations in local circles, college campuses, and tech meetups which revolved around the disruptive potential of decentralized finance and what it might mean for a country as large and diverse as India. While, on the other hand, government bodies like the Reserve Bank of India voiced concerns early on, issuing cautionary statements about the volatility and potential illicit uses of virtual currencies. Crypto was increasingly misused in scams, money laundering, and potentially even terror financing. Several cases of hawala transactions and illicit cross-border payments began surfacing, with criminals leveraging crypto's pseudonymous nature to move funds undetected. Such high-profile incidents reinforced the RBI's skepticism, prompting it to issue cautionary statements about the risk of hacking, price manipulation, and illicit activity. No outright ban existed at first, but these warnings foreshadowed stricter measures to come. This tension boiled over in April 2018, when the RBI effectively barred banks from providing services to any entity dealing with digital assets. Overnight, exchanges found their bank accounts frozen or closed, forcing them to rely on peer-to-peer models or shut down completely. CoinEx, which was once a prominent platform, now ceased operations amid the turmoil. Some entrepreneurial minds even moved their operations to more crypto-friendly jurisdictions abroad, underscoring how fragile the local ecosystem had become. Though the ban stifled activity, it did not squash India's interest in crypto. Many believed that the RBI's move lacked a solid constitutional foundations. Lawsuits were filed, advocacy groups formed, and in March 2020, after nearly 2 years of uncertainty, the Supreme Court overturned the ban. The justices deemed the directive disproportionate, noting there was little concrete evidence that banks had suffered harm by dealing with crypto businesses. This decision injected fresh energy into the marketplace. Exchanges relaunched, trading volumes soared, and new investor segments emerged. WazirX, which had been operating in constrained fashion, became a key player alongside platforms like CoinDCX and the resurrected ZPay. Suddenly, India was back on the global crypto map. That renewed energy, however, did not come without risk. A phenomena seen worldwide but particularly potent in emerging markets is the rise of scams that exploit the hype around cryptocurrencies. India was no exception. One of the most infamous Ponzi schemes was Gain Bitcoin, which promised incredible monthly returns and roped in thousands of individuals dazzled by Bitcoin's earlier price run. In reality, it was using new investments to pay off older participants, and once it collapsed, losses stretched into the hundreds of millions of dollars. Another scandal involved OneCoin, a global Ponzi operation that also targeted Indian investors. Users were led to believe they were buying into a revolutionary new blockchain project. In reality, there was no legitimate blockchain at all. Even legitimate exchanges faced security issues. In July 2024, WazirX suffered a breach allegedly carried out by the North Korean Lazarus Group, losing around $234.9 million. These incidents made front-page news, reminding everyone that while the potential for profits existed, so did significant vulnerabilities. The silver lining is that such cases push both entrepreneurs and regulators towards stronger security framework, better transparency, and ongoing dialogues about investor protection. Despite these threats, India's crypto adoption has continued to skyrocket. The numbers tell a story of remarkable growth. Various estimates suggest that between 20 million and 100 million Indians hold some form of crypto, making up around 7% of the population by certain counts. In 2021, India placed second in the Chain Analysis Global Crypto Adoption Index, an astonishing feat considering the unclear regulatory signals that had beset the market just a year or two earlier. Simultaneously, more than 230 blockchain and crypto startups attracted over $600 million in funding in 2021, showcasing the massive venture capital appetite. Part of this investment boom can be attributed to a growing trust that despite the RBI's earlier attempt at the crackdown, India's legal system and entrepreneurial culture are robust enough to nurture the industry. NFTs and decentralized finance have also found a place among Indian users, with the country ranking 5th in global traffic to OpenSea. Meanwhile, job postings for crypto and blockchain roles surged over 10,000 in some months, reflecting a demand for specialized skills that didn't exist just a few years ago. Still, the government's stance remains something of a puzzle. On one hand, officials recognize the technology's potential, while on the other, they worry about the misuse of illicit activities. In 2013, RBI cautioned citizens about virtual currencies, warning that they carried risks such as hacking, money laundering, and price volatility. The 2018 ban was just another major manifestation of that unease. Even after the Supreme Court lifted it, major banks and payment gateways were slow to partner with crypto businesses, fearing silent pushbacks from authorities. Then, in February 2022, the Indian government introduced a landmark taxation framework for crypto gains, imposing a flat 30% tax on profits and a 1% tax deducted at source on transactions, along with a 30% levy on gifts of crypto assets. This was significant because for the first time, crypto was being integrated into the tax code, suggesting an official acknowledgement of its permanence. Critics argued that the 30% tax with no provision for offsetting losses against gain was crippling for active traders. Yet many in the industry preferred this to a blanket ban. It meant crypto wasn't illegal. It was simply heavily regulated and taxed. Meanwhile, India's plans for a central bank digital currency, commonly referred to as the digital rupee, remain on the table, reflecting a parallel strategy to harness blockchain-like technology in a centralized manner. With the recent appearance of JioCoin on the Polygon chain, Reliance Jio seems poised to shift India's crypto landscape yet again. Polygon, formerly known as MATIC Network, is an Ethereum layer 2 scaling solution that aims to resolve Ethereum's well-known pain points: high transaction fees, limited throughput, and slow confirmation times. By operating on side chains or child chains linked to Ethereum's main chain, Polygon processes transactions more quickly and cheaply, while still leveraging Ethereum's robust security. It has become a popular platform for projects that want the benefit of Ethereum's smart contracts and ecosystem, but without the usual concession or high gas cost. For Indian audiences, Polygon represents a homegrown engineering success story, founded by developers in India who foresaw the global need for scalable blockchain infrastructure. If JioCoin truly takes shape as a blockchain-based reward system, it could attract millions who have thus far remained on the sidelines of crypto adoption. Early sightings of JioCoin within the JioSphere web browser, both on Android and iOS, suggest that Polygon Labs' Ethereum Layer 2 solution underpins this new token, providing faster transaction and lower fees than the Ethereum mainnet. In the facts section, Reliance describes JioCoin as a reward token earned by engaging with various apps under Jio Platform Limited, linked to the Indian mobile numbers. This hints that MyJio, JioCinema, and other popular Jio applications may soon offer JioCoin incentives for tasks like watching content or using payment features. Such a model brings to mind earlier loyalty programs, but on a decentralized infrastructure, where users potentially hold coins in their own Polygon compatible wallets. This approach could normalize the concept of Web3 tokens for a vast user base, effectively bridging the gap between mainstream and blockchain technologies. Still, the launch raises questions about how JioCoin will navigate Indian crypto regulations. Given the 1% tax deducted at source on crypto transactions and a flat 30% tax on gains, new tokens often face hurdles in integrating with the country's financial architecture. Reliance brand recognition and extensive network, however, might enable policy clarifications and even partnerships that bring novel solutions to compliance and user trust. Another question is whether JioCoin might compete with the forthcoming digital rupee, the central bank digital currency. If consumers already have a government-backed digital alternative, how would they view a privately issued token? Jio's unique capacity for bundling and cross-promoting services could nonetheless give it a sizable advantage. All told, India's crypto narrative continues evolving at a rapid pace. From quiet Bitcoin experiments a decade ago to Supreme Court reversals and dynamic exchange growth, the market has shown remarkable resilience. Now, JioCoin's appearance on the Polygon chain might mark the next significant chapter, one where blockchain-based tokens become an everyday fixture, transforming how millions of Indians perceive and interact with digital finance. If Jio manages to channel its trademark disruptive strategy into this token rollout, the impact could be felt across India's financial ecosystem for years to come. This is Sampriti. See you in the next one.